Hey Gen W fam, Nick here, your guide to building generational wealth by mastering the markets. Today we're zooming into the structure of the SPY, and I'm going to ask you, who's in control, the buyers or the sellers? Because right now we're standing on the line in the sand, and whichever side wins will set the tone for the next move. So buckle up, grab your charting tools, and let's get tactical. Before we dive into the charts, let's ground ourselves in what's going on behind the scenes. Yesterday's action, with tech names and AI-driven stocks under pressure, is not just noise, it's message. Markets are leery. The Palantir Technologies and AMD post-earning tumble triggered wider fears of stretched valuations across the AI space. The risk index remains elevated, uncertainty is creeping back in. And let's not forget the backdrop. The US government shutdown is now in day 36, and data flows are delayed, meaning structure and sentiment matter even more right now. So, as we chart SPY, know that this isn't just about levels, it's about the psychology. The question, do buyers trust the evidence enough, or will sellers capitalize on that hesitation? Alright, pull up the one-day chart for SPY. Here's what I'm seeing. Yesterday we got an inverted hammer on the daily time frame. We opened near Tuesday's lows, ticked slightly lower, then buyers stepped in with decent momentum up to the $680.50 area. But volume was declining as price rose, which tells us the rise lacked conviction. After 11 a.m. CT, the internals began to deteriorate, meaning new money buyers weren't showing up. That's a red flag in the structure. Then in the final 45 minutes, sellers drove price back under VWAP and pulled us closer to the $674 support. The day also gives us key structural levels. Support at $674, tested 2 days in a row now. Buyers do show up there. Resistance around $680.50. Prior support turned barrier, 3-day history. As long as price stays above 660, technically we remain in the daily uptrend. Higher lows, higher highs. But the risk of failure is real. Now let's map out the 3 possible paths, and I'll talk through how I would operationalize them. Path 1, bear breakdown. 2 back-to-back inverted hammers with equal lows suggest that if sellers get momentum, they could crack that $674 support. If we break $674, the partial gap down to $672.75 becomes a target. The 20-day moving average is right at the bottom of that gap. A structural magnet. Weekly options expected move is $671.19. Astonishingly tight confluence with the fib 50% retracement and a high volume node at $671.50. That's strong buy the dip structure below, so a breakdown would need a catalyst. Operational cue, if price decisively closes under $672 with rising volume, play short or hedge ready. Path 2, sideways balance, coiling. We push into a range between 673 and 680s and chop sideways, forming a coil. Volume will decline, price will bounce between support and resistance as buyers and sellers await clarity. Operational cue, stand aside or trade small range moves, wait for a breakout. Path 3, bull breakout. The volume profile shows more support at $674 than resistance at $680. If we open today near $678, then push up to and break $650 with strength, retested as new support, we could easily target $685 by week's end. It's that simple and clean. This is where I get coaching on. As a Gen W trader, managing your mindset is your edge. Here are 3 mindset drivers. Respect the range. If we're in path 2, sideways, resist the urge to trade every bounce. Sometimes standing aside is the best move. Don't fight structure. If you see declining volume into resistance, fade the move. If you see rising volume through support, treat it as a trigger. Be catalyst aware. This market is jittery. Big tech got AI valuations are flagged. Shutdown delays data. Sentiment is fragile. Even a small news item can tip the balance. So you might lean bullish structurally, but you stay nimble and risk aware. So to wrap up, we're perched at a critical spot. The $674 support line is holding, but the $680.50 resistance is looming. Buyers need to show up. Sellers are ready if they sense weakness. For me, I'm leaning sideways with bullish bias. I'll trade only when the intraday charts confirm a move, not because I hope for one. If you want full transparency and ongoing updates, make sure to hit the bell icon and jump into the comment stream. Tell me whether you think we break down or break out. Stay disciplined, stay curious, stay Gen W. We're building wealth for generations, not just next quarter. I'll see you on the next one.